Hey everyone, Ryan Bolton here. I am a mortgage nerd, and today is your mortgage market report. First thing I'd like to start out with is the MBS, the mortgage backed security market. At the time of this recording, we're positive 9 basis points, which is continuing kind of a recent trend of the economic data that came out last week. A lot of it was the CPI, the Consumer Price Index, which was helping inflation numbers that were coming in. So that's kind of some positive when it comes to inflation. So that's been kind of digesting through the market, and that's where we're seeing a little better rates on the bond market, but we're just kind of continuing a recent trend. Right now, if I go back, let's go 10 days. We're positive 8 of those 10 days. One of them was a pretty big positive, one day especially. The rest of it just been kind of wait and see, kind of a status that hasn't moved around too much. We lost a little bit of ground at the end of last week, but for the most part, we're positive over the last 10 days, especially. And again, 9 basis points as I do this recording. Another thing I wanted to bring up is a lot of Fed meetings are happening. A lot of comments are coming from the Fed. Governor Waller, made some comments today that I think were pretty interesting. He said, first of all, inflation is not accelerating and that April CPI was a relief. Policy is at the appropriate level to put pressure on inflation, and he does not think hikes are needed. The golden ticket here is what he said. In the absence of significant weakening in the labor market, the need for the next couple of months to have good inflation data, he would then be more comfortable with easing the stance on the monetary policy. So that's what the Fed's going to do. They're never going to give you anything really solid right down to the number, but there hasn't been a lot of talk of raising the interest rate, and even more thoughts that there will be a reduction. It seems like it's leaning that way. Now, we thought maybe it'd happen a little bit sooner. There was a lot of talk maybe in May, and that's when rates kind of were looking better towards May and kind of jumped up a little bit when they pulled back on that response. But with April's numbers kind of getting digested and kind of spilling into May, that seems like that there may be more of an opening in the coming months. But again, they just need better numbers on inflation. It's just been kind of stuck with everything they've done. It did get lowered off the highs, but it isn't to the target number they want yet. And they've all kind of come to a consensus. It still needs to be a little bit better. So it is still being put off a little bit further. There's all kinds of reasons for that as well. But I thought it was pretty interesting. Another inflation number that kind of came out was Target announced that they're lowering prices on like 5,000 of the most frequently bought items. So that's going to be an interesting to see how that plays out. As the report I did last week talked about, Walmart actually showed some profit. And so I think that's just part of the competition there, that there is a little bit more of a pressure to move those prices back down. So they announced they're going to be lowering on like their most frequently bought items. They're a lot of food, drink, non-discretionary items. Those things are going to be lowered to maybe compete a little bit more with Walmart. The other thing I saw that was pretty interesting I wanted to bring up was CoreLogic. They do so many reports. They're one of the main things that charts and does all kinds of stuff within the industry. They have a rental report for the month of March. And for the first time in 14 years, the attached dwellings actually went down a little bit year over year, where the detached rentals actually went up. And I think this is just because the supply has kind of increased with some of the higher density, because that's been kind of a push for affordable housing and other things, is to allow for density to increase, which really what you end up doing is taking a property and just putting more units on that same property. That way you can sell more and get them at a cheaper price point, because you're not really going to see a price in the land differ that much. But if instead of putting one unit on that property, if you can put four or six or some sort of combination of that, then the cost per unit goes down, which makes the rental more affordable. So I think that's partly what we're seeing. But it's the first time in 14 years that attached actually went down, which we usually don't see, because they're always going to be a cheaper price point than anything that's just a freestanding detached home. But I thought that was pretty interesting, just because you don't see that happen. Obviously, 14 years, that's quite a while for that to have that happen. Let's see what else we've got. I don't think there's anything else, just a lot of other reports this week. So I'll keep you up to date. I appreciate you watching. Love your comments, feedbacks on these video, anything else I put on the channel. But I find it keeps me a little more on my thumb on the market a little bit more by having to do these videos. So I've actually enjoyed them really, really a lot, just to be able to help everybody out there. But appreciate your feedback. Love you to subscribe, like the video, share it, and let me know what you think. But we'll see you on the next video. Thanks, everyone.